your advice for people that, because we never really talked about this before. What's your advice for margin, people that want to use margin?
That they want to use it?
Yeah.
I would say if you want to use it, I would be very methodical about the way you use it. So in other words, like, here's the way I would think about it. This is me personally. If I see an opportunity in a stock or in something that I think is really good opportunity, like I've been following stock ABC for a long time. The fundamentals look amazing to me. I think there's an opportunity that others are missing, and it just doesn't look like it's trading where it should be trading. That to me is like opportunistic. And I say, you know what, with the amount of money that I have in my account, I think I have an opportunity to get outsized gains. Would I advocate that people do that on a continual basis? No, I would not. I would say, you always have to come up with a plan, stick to your plan, and that's good or bad. So if that goes against you, then you have a plan to get out of it. The same way you have a plan to get out of it if it goes in your direction. And I think the thing that we've been really, really pleased with seeing is that when people stick to a plan, like you can't change your plan in the middle of the movie. You have to stick to that plan. And when they do, I think that we tend to see more success. But so the direct answer to the question is, I think what we tend to see is people using margin episodically when they think that there are opportune times, for that to be a good thing for their portfolio.
Was last month one of them?
Was last month? Yes. In the eyes of some customers, I think so. Yeah, because I think they tended to see, even though our margin balances came down, that's just because the balance, balance of everything came down. It's 20% lower, But I think you see people, like, you can watch them become more aggressive when they think something is at a level that they feel is really attractive.
Yeah. Steve, you guys sit in a unique position. Obviously, you said the average age is about 35. And so of a retail investor, but you are seeing sophisticated trading behavior, right? When you just talked about margins, even options, buying low during opportune times. What are some of these other characteristics that you're seeing? Obviously, you've been in this space in finance for a number of decades.
Yep.
What are some of the other atypical things that you're seeing from such a young age demographic when it comes to trading?
What's kind of interesting is, so I came from the world of Schwab's and TD Ameritrade. The average customer age is 55 to 58. Their accounts are way bigger because they've been doing it for much longer, and they're at the end of their, or toward the end of their investing.
What was the average account for the Schwab? And just
average account over there is like 250. Average account at Robinhood is about 7K.
Okay.
So there's a couple things. Number one, I absolutely reject the idea that just because I'm younger and my account's smaller, that I'm not as sophisticated. I can tell you with absolute certainty that's not the truth. But I think that the thing that's kind of ironic is there's a lot of similarities between these customers, even at that age with that account size, and the younger ones with the smaller account size. When the market starts doing what it has done in the last month, becomes very volatile, customers move away from individual securities and they trade broad-based ETFs. They trade the SPDR, the IWM, the QQQ. Because here's their logic. This market has moved down 20% in a very short period of time. I like stock ABC, but I don't have as much certainty that it's going to rebound as I do that the market is going to rebound. So and by the way, this happens across the industry. Like, you can see the volumes across the industry. Broad-based ETFs become a bigger percentage at Robinhood, at all these other places. And it's just a safety factor for customers. Like, they want to be opportunistic, but you're protecting yourself, right? Like, if there's some anomaly with one stock and I'm wrong and it goes down 50%, that's ugly. If there's some anomaly with one stock and I bought the S&P 500, it goes down a penny, right?
I'm glad you said this, because something I've been saying for a long time. It's right in line with our philosophy, for sure.
On the AI side, I have a question for you. What plans do you guys have for AI in terms of integration on the platform that you can tell us about? Because I I think at some point there will be some kind of integration into Robinhood Gold. But is there anything you can tell us about how you can use AI to become a better trader or investor on the platform?
Yeah, we're doing a lot of it, like a lot of financial services companies. We started internally. So I mean, efficiencies and helping people. But I think one of the first things we're doing, and one of the things we talked about at our Gold event, was Robinhood Cortex, which is essentially using AI to, if I have a portfolio or I have a watch list and I have interest in these securities, like anything that's happening, any market moving news, we aggregate it and get it to you right away. The second iteration of that will be, okay, well, now I want to know, I'm bullish, I'm bearish, I'm, neutral. What is a good strategy that you think might be able to assist me in whatever that investment thesis is? And that's where I think, that's where it becomes really interesting. And that's the next iteration.
So like a real-time AI advisor?
Yeah, exactly.
Okay.
Well, Steve, thank you for your time. Before you leave, I just one last question.
Yes.
The Trump administration.
Yeah.
Interesting choices that they've been making so far.
Oh man.
Are you bullish or are you bearish on the political leadership as far as how it's going to impact the stock market?
It's weird. I'm bullish on some of the things that are being done. I'm bearish on the way they're being done.
Same.
I'm actually bullish on some of the things. I think some of the things needed to be addressed. I just don't like the way they're being addressed. And I would also argue that, like, in the interest of, like, stop telling us that it's all going to be good and, and that we should understand what the changes are. Nobody understands.
No one gets it.
I mean, even the CEOs,
like the Hollywood tariff. What?
Including the person saying it.
Yeah. I have more clarity on how much water my shower can flow now than I do on what tariffs are going to be in some country. So I would argue, like let's get the messaging down so that we're all in the market all the time. Like, what we don't like is uncertainty, and give us the rules and we'll play them, right?